First and foremost, I want to cover what just happened in the markets. A lot of people were getting really excited about some new rallies for new all-time highs. Everything looked like it was getting ready or primed to break out. Bitcoin was leading the market, hitting its first new all-time high in a little while to about $126,000. And then everything just got dumped. And arguably that is because of, yet again, leverage, greed, people taking on more than their balance or wallet can currently handle. And in the last 24 hours, we saw about $580 million in liquidations, which created for that little dump in virtually all of the major cryptos. That said, when you actually look at the open interest was climbing really rapidly alongside the price on a daily time frame, which whenever you get open interest increasing alongside price, that means longs are opening at the market. People are taking on a lot of leverage. Then we saw this dump, which is actually nice and another little flush, but we're still above the $120,000 level, and that dip is being bought up. So yes, open interest dumped a little bit. We're seeing a few liquidations. If I come down to that hourly or 4-hour time frame, you can see that we had liquidations on Bitcoin to the tune of about $84 million on a single 4-hour candle when it came to Binance's Bitcoin USDT. If I were to look up XRP, you can see that the exact same thing occurred to the tune of about $16 million. Now, when you combine that across the board on all cryptos, all exchanges, all USD pairs, it does add up to about $580+ million, which is quite a bit. And that's what caused the dump from about $3.04 back down to $2.86. We're still trending to the upside. So when you zoom out, as long as we remain above that 275 range, we're still looking pretty happy and healthy. We have yet to break out on something like XRP, but you'll notice right here, again, open interest climbing pretty rapidly into those local highs. And then we get this breakdown in open interest, loads of liquidations. I think people are just greedy before the real pump, and that's what caused this dump. But it's important to remember that the long, great debasement trade is still on the table, and that's what Wall Street believes moving into Q4 of this year. The market is really giving you a critical warning and a signal that if you're not in different assets other than the dollar, you are going to get left behind. When everything is at an all-time high, you need to ask yourself something. What has changed? Well, safe haven assets are doing well. Risk on assets are doing well. Real estate is doing well. Crypto is doing well. Global bond yields and everything in between is hitting daily record highs. The denominator for most assets in this case is the US dollar, and that is what has changed. The US dollar is on track for its worst year in 40+ years, down 10% year to date. Not only is that the numerator going up, but the denominator is going down, which is the dollar. Confidence in fiat currencies is at multi-decade lows, and that is exactly what I've mentioned over and over and over again. It's because confidence in our leadership in the central banks is at all-time lows. Virtually everyone wants to hold anything other than the dollar anymore. Or as Shinaka put it, we've entered the second Bretton Woods collapse. And at the same time, 60% of CPI items are rising greater than 3% as the Fed cuts rates into inflation. Now, speaking of the Fed, we are due for another interest rate decision on October 29th, which is a Wednesday this year. And with things at all-time highs, if the Fed says, hey, inflation is pretty bad, and we get a poor jobs reading with unemployment on October 10th, they're going to take this data into consideration and either remain flat at 425 basis points or likely lower another 25 basis points. In both scenarios, this is bullish for markets and argumentatively bearish for the dollar, which means every chart is screaming the same story. The fact that fiat is fracturing or failing. But what's really interesting is that this time there is no Bretton Woods coming, and he states that the system's replacement already exists, and that is Bitcoin. And as we've seen with gold, it's already pumping for some crazy all-time highs. Again, $27 trillion market cap, which when it comes to the grand scheme scheme of global markets really isn't that much, I would argue that a better programmable form of gold is Bitcoin, which means Bitcoin should be at least half the size of gold in terms of its market cap in a new global monetary regime like we are experiencing right now, while at the same time it's currently only sitting at $2.4 trillion, which means we should easily 5 to 7x from current day's prices. And if that were to occur with Bitcoin, there's no reason in heck why XRP couldn't be at least a $5 to $10 asset, potentially even by the end of the year. Now, nobody knows how high or how fast these things are going to soar, but the rate at which gold has been pumping leads me to believe that there's going to be a flight of capital into digital currencies as well. And in the same way that money rotates away from Bitcoin into altcoins, money will eventually rotate out of gold, which is the current leader, into cryptos, which is probably going to be Bitcoin first, and then into altcoins. So it's going to be like a rotation of gold, Bitcoin, altcoins. Now, some of you might know who Ken Griffin is. He's the CEO behind Citadel, which is a major market maker who was surrounded by a lot of controversy during the Robinhood GameStop era of like 2020 to 2021. However, I think he states the case pretty eloquently. Let's listen in to what he says.
Inflation is substantially above target and substantially above target in all forecasts for next year. I mean, it's part of the reason the dollar's depreciated by about 10% in the first half of this year. It's the single biggest decline in the US dollar in 6 months in 50 years. Gold is at record highs. And the appreciation in other dollar substitutes, to use that word loosely, in items like crypto, for example, is unbelievable. So we're seeing substantial asset inflation away from the dollar as people are looking for ways to effectively de-dollarize or de-risk their portfolios vis-a-vis U.S. sovereign risk.
Are you really seeing that?
No, just check the price of gold.
Well,
I mean, I don't have to look very hard.
It's a life of its own. Yeah.
What?
It's a life of its own, gold.
No, but it's a life of its own as you see sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me. And there's been plenty of published research in recent weeks, months, about foreign investors now, when they buy U.S. equities, hedging the returns back to their local currency. So that, again, is a bifurcation of I'm going to bet on American business, but I want to immunize some of my sovereign exposure to the United States.
And so this makes it extremely likely that we are going to continue to see some new all-time highs in virtually all assets that are already performing well against the dollar. That would include Bitcoin and XRP, which will likely follow Bitcoin. That said, even Morgan Stanley is jumping on board, as recently they stated they aim to support their financial advisors and clients who may flexibly allocate to cryptocurrency as a part of their multi-asset portfolios. This was never done before by them. Sure, they've done it for some clients, but now they're actually advising their financial advisors to go to all clients and do this, which GIC guides 16,000 advisors managing $2 trillion in savings and wealth for clients. This is huge. And again, this is going to provide a lot of needed extra gunpowder sitting on the sidelines, which isn't going to perform well in the dollar, and they're going to want to take advantage of this play. Then when you combine that with the fact that XRP whale holdings are now nearing a 3-year low. Now, in certain situations, if this was a bear market, I'd actually look at that as very negative news, but I look at this as very positive news, which means that the price is still holding up above 275, a very healthy, strong range. Yes, it's been range bound. Yes, we've been in a descending wedge or a triangle, but on a breakout, things are going to look really good. So imagine the majority of the the people that were able to sell a large chunk of XRP are now officially out, which leaves the room open for new investors to enter. And any amount of buying is now going to push the price into a mega bullish end of the year where Bitcoin is doing very well. So this is actually a very positive outcome in bullish markets, a pretty negative outcome in bearish markets, because this would mean whales want to continue to exit. But if there are no buyers stepping in, the price is going to continue to dump. But when whales are exiting and you still have a very high price into a bullish environment, things are looking extra good on news like this.